Welcome to Alpha Cave. I was just talking to a friend right now about dividend investing and growth stock investing and following everything that's going on with the coronavirus and looking at different ways of investing. Now, what I wanted to do today is because we started talking about Google, which is a very expensive stock. We talked about, some of the other stocks like Apple, even Amazon, which is very expensive as well. But there's one way to invest into a growth stock that is going to make money, and it's going to hopefully continue to make money for you, and then invest into other smaller stocks, other smaller companies. And we want to see what's the difference at a year's time if you invest the same amount of money into a smaller company compared to something like Google. So I'm going to take Google and I'm going to take NRZ. And those two companies are companies that I'm really interested in, and I wanted to compare them out to see how we would do after a year's time. Now, remember, they both took a hit with the virus going on right now, so the prices are a little lower than what they were. So if I would have done this a month ago, the numbers would have looked differently for both of them. But I took a year's time, so I went back a year and I'm going forward a year, looking at those prices and then seeing what's going to happen with the same amount of money. So let's start again talking about investing $100,000. And first, let's start with Google. So we put $100,000 into Google at this time. The price is 1150.85 right now. So at that price, we're going to get a total of 86.89 shares. So I'm going out a few decimals because in Robinhood you can't do that yet, but or at least I can't. I think they're already doing fractional shares, but I'm not in that list yet. And in other companies you can do fractional shares as well. So I wanted to add that in here just a little bit further to get a little bit more precise with the numbers. So you're going to have 86 shares of Google, which is fantastic. And after 1 year, the price is $12.95.74. So that is, your profit per share would be about $144.89. And at that rate, your new amount of money that you would have is $112,586.85. And that is a total of 12.59%. That's very good, actually, if you do that much on your stock. Now, a few months ago, this would have been maybe a little higher, but that is actually a good number. So now let's remember these numbers here. We'll put them together at the end, but we're going to invest another 100,000, but this time it's going to be into new residential. Remember, you had about 86 shares of Google. With new residential, you're going to put $100,000 at 1642, and that is 6,090.13 shares. That's quite a few shares. So now let's go out and see how we would do after 1 year. And after 1 year, the price with the virus came down to 1560. So we actually lost a little bit of money here. And so our new total here is going to be minus 82 cents per share that we made. And total is $95,000. So we actually lost a little bit of money, about 5% of your income that you put in. However, new residential is a dividend stock. So let's look at what would happen when we put the money back into new residential that they give us. So let's go through that, and we're going to see, first of all, that you had 6,090 shares, and the first dividend they paid was $3,000, $3,045, and that will reinvest it, bring you up to 6271.06 shares. So now we're getting more shares, so we expect that our next profit is going to be a little bit better. So on July 26th, they paid the price was at 1572, and we made a dividend of 3135.53. Now we're up to 6,400 shares, So 6,400 shares, you start at 6,000, that's not too bad. Your next dividend, the price is a little lower, it's at 15.84, and so you're making 32.35. So every time we're making just a little bit more money, and now you reinvest that, and now you have 6,674 shares. And the last one was January 31st. The price had gone up to 16.74, and when we buy into that one, we are going to have $3,337 as dividend, and now we have 6,874 shares. So definitely we have a lot more shares now. At the current price, it's at $15.60, and our total is $107,000. So we made 7.24% on this dividend reinvested into NRZ. So we lost about 80 cents, 85 cents per share, but we still made 7% on this stock, which is rather amazing. So if we would have made $1 off this share, maybe I think our percent that we would have made was about 15%. And that's actually what we're actually after. About 15% per year would be fantastic. Anything above that is even better. But for now, that's the comparison we have year to year from a certain date to a certain date. And we see that they're comparable. I mean, at this point, we made a little bit more with Google. I think that over time, with the stock prices going up, you're gonna have a good investment no matter where you put your money into these companies. Remember, Google at this time doesn't give a dividend. Now, their earnings per share is fantastic. I saw those numbers. Let me try to put it up here for you, but those numbers are ridiculous, like 12, 13, 14, 15, $16 per share that they make per quarter. So making that kind of money is fantastic. And when they do start giving dividend, if they do start giving dividend, you might be doing much better with a Google stock. However, of course, you're going to have less stock because it's more expensive, but you will probably do very good with that if they ever decide to give dividend. If they don't give dividend, that's a company that I think is going to keep on doing very good, and that price is probably going to keep on going up astronomically, and they're doing fantastic. So we just have to keep an eye out on that stock and see how it does. And if you have money that you want to invest into that's something for you to consider as well. But NRZ is a great company as well. We see that with REITs or with other dividend stocks, you can do fairly well. At this price that the stock is, I like the price because I like that it came down in price, because now it's offering me the opportunity to buy a little bit more into this company. And I see what other REITs have done, like Reality Income, which is the ticker symbol O. The price of that one has gone up dramatically over the years, and I think that NRZ is another company that can go up dramatically over the years. So we're going to be making dividend, and the stock price hopefully will keep on climbing, because it's a very good company that I can see. As far as I can see, it's a very good company. I think you guys should research this a little bit, look into this company, and then let me know what you guys think as well. Alright guys, thank you so much for watching. Like and subscribe. I hope you liked this information that I gave you, this comparison that we did, and hopefully we can keep on doing things like this for a long period of time. We love it. Get other people to subscribe and pass these videos around, so hopefully we can get more subscribers, and hopefully we can keep on doing this for a lot longer. Thanks guys. Take care.